This is Rod Kusin Spooman for Risk on March 22nd, 2010. All times on the Charter Central Standard Times. We're looking at the euro. We just finished video 3 and ran out of time, but we were discussing the subject of divergence, and I like to use a DPO, a Detrended Price Oscillator, for verifying divergence. Now, we had just commented that on this rally up into the zone, there was no divergence on the DPO. On the other hand, from that high, as we come down to this point, you can see that while we didn't quite tag the high here, this high and this high are not quite as high, but there is a major divergence. Major divergence. And correspondingly, market is now moving down. Let's look back at the zones. So sure enough, exceeding the zone, just into the zone, we thought this might be a good time for trade execution. A little bit beyond the zone here, that still could work, but over here, even better. We're very close to the top of the move. Can't even make it into the zone. Major divergence. Down she goes. And we're looking for it to at least move into the lower zone here, which is currently at 1.3514. So just a brief review of the zone issue. Now, we mentioned earlier that we had this group reversal on every one of our charts. Every chart had a group reversal right here. And even though we hadn't moved into the lower zone, that reversal turned out to be extremely compelling, because that market, even though we had a short trade up in here, came back down, group reversal, boom, up she goes 40 pips. Now, having gone and exceeded the upper zone, we wait. The market should continue to rally. What we're looking for is the top of the move to be to not be exceeding the zone, at least not by much. And even better, if we're getting higher highs and we can't even make it into the zone. Higher here, higher here. So here's the first place that looks promising. This isn't bad, and this is wonderful. Down she goes, and that zone is even dropping further. We've seen the zone work exceptionally well, and if you haven't looked at our other videos, please do so. Let's just go back, real quick review. All right, into the zones here, here, and here. Moves up. It exceeded the zone to a degree. Yes, it did. But it did come back down, ricocheted off of that zone, tried to rally up, ricocheted off of this zone, tried to rally up. All successful trades, by the way. But once it starts to really move, the lows stay way beyond the zone. And then finally, it begins to flatten out right in here, back up, exceeds, doesn't exceed, down she goes. Group reversal, oh my, up she goes. Then right in here, and as we can see, it's still reaching for that lower zone. So, works very, very well. And now if we combine that information with the zones of a series of stochastics, it becomes even more interesting. Our stochastic plotting mechanism allows us to use a variety of different stochastic settings, 2, 3, 6, 900, 100 stochastics, all on the same chart, No data feed showing, just the stochastics, so we know exactly where we're standing. Use a data window if you want to examine this, so we can really see more clearly where there's a much better opportunity for taking a trade, profitable trade, using multiple stochastics. And then just add our group reversal system onto that, and you've got a very effective method for pulling trades. So look at our videos through the course of this day, March 22nd. We've got 4 videos out there now. And that kind of carries you through the course of the overnight market into the present hour, which is just beyond 10:30 Central Time. We're coming back down into the lower zone as we speak. Let's take a look at that. There we are, lower zone. And our last comment on this, by the way, when you look at these zones, you've kind of got a pretty good idea of what your target is likely going to be profit-wise. Look at, in this window, the upper one and lower one. Now take the difference between 38 and 11. Okay, so that's a 27 pip move. If we can move effectively between these two zones, you already have a pretty good idea that a significant trade is likely to take place. Now the outer zones may be a little harder to reach. The upper two and the lower two. But at least the upper one and lower one could make for an effective trade. And you can just chart that any way or at any time you want. So in here, 0.3510 versus 0.3485. So again, about 25 pips. So there was a real good trade opportunity there throughout the course of this move, and you pretty well knew that if this thing really takes off and starts coming down, that's your target. And in our strategy system, then you can, if you wish, set up the strategy to take your profit target based upon the number of pips that you're expecting. All you do is just set it up right in here. This is for ticks. When we're using the ES, it works just as effectively for pips. So same difference, 25, and the strategy will automatically exit the trade once that level is achieved. So that's another way you can use these zones. Okay, so that wraps it up for this discussion of the RSK pip strategy. We used to call it the tick strategy, and now when we're working on the euro, we're going to call it the pip strategy. Works very well, and it's a fairly simple setup. There's not a big learning curve here, not at all. Some very simple tools work very effectively. It's all price action in this case. So we're looking forward to continued good success with our group reversal system trading the euro. And this is Rod Kusin and Spooman for Risk.